As we say goodbye to April, we are also saying goodbye to one of the worst starts to a year for the stock market ever. Will we change course in May, or will it take a little longer? That's our jumping off point in this week's Fastest 4 Minutes in Finance. Hello again, I'm Scott Inman. Well, a heads up right out of the gate today, we will be taking a look at several charts this week. So if you don't get the video version of the Fastest 4 Minutes in Finance, think about doing that. And you can do it by texting the word FAST to 501-381-5228. We will deliver the video to your email inbox every week. Okay, here we go. The S&P 500 dropped 13.3% in the first 4 months of 2022. According to a chart from LPL Research, that's the third worst start to a year ever, and it's the worst since 1939. It has been unexpected, but maybe it should not have been. We've talked before on this segment about the weakness of a midterm election year, especially early in that election year. This chart shows that very clearly. You're looking at the quarterly performance of the S&P 500 broken down by each year of a presidential term. We are currently in the second quarter of the second year of President Biden's first term. As you can see, the S&P 500 is down on average 2.1%. That's the worst quarter on record. But take a look at the fourth quarter of year 2 and the first quarter of year 3. Those are historically the best on record. Now let's stretch the time frame out a little to a full year. If we take a look at another chart, this one shows the maximum pullback or loss of the S&P 500 off its high in every year since 1980. There are some big numbers in there. If you take a look at the gold line, you'll see that the average max pullback in all those years is 14%. This year, the S&P 500 maximum pullback off its January 2nd high is 13.9%. That's right around average. Now look at all those blue lines. The S&P 500 has finished the year with positive returns in 32 of those years, even with all those big pullbacks. That suggests a lot of positive things could happen in 2022. Well, that brings us to May and the reintroduction of the old market adage, sell in May and go away. This saying is born out of the market track record that tells us the next 6 months are the weakest. And historically, that's true. May through October is all time up 1.8%. Any other 6-month stretch you choose is up at least 3%. But that hasn't been the case in recent history. Take a look at the past 10 years, as indicated in this LPL chart. The S&P 500 has been positive in 9 of the past 10 years and up 5.7% on average. So the bottom line here is charts are useful to remind us that it's often never as good or as bad as it may seem, and that staying the course and sticking to your plan has paid off. LPL Research believes corporate earnings are still holding up under historically high inflation, and those inflation pressures should ease over the course of the rest of the year, giving us reason to believe stocks will rebound in 2022. Thanks for listening.